Thank you, Mr. President. I take this time to talk about a fair shot for American families on quality, affordable higher education. It's very appropriate that the senator from New Jersey is presiding, because he's been one of the great leaders in the United States Senate on the affordability of higher education, and it's been a pleasure to work with the presiding officer. Let me just go through some of the numbers first, and it's somewhat shocking. We have 20 million students who will enter college every year. 60% will exit with student debt. The majority of students that now attend college will have to borrow money in order to be able to have a college education. 37 million Americans today have college loans that are outstanding. And yes, we know some of those are young professionals. Some of those are older people. I was surprised to learn that almost 8 million Americans over the age of 50 have college loans that are still outstanding. So this is a burden that many American families will take for the rest of their life. The average debt today is $29,000, and that number is rising dramatically every year. So when you graduate, the average debt, $29,000 that they carry. $1.2 trillion in outstanding college loans, more than credit card debt. And as the senator from New Jersey pointed out earlier today, the percentage of a family's disposable income that you need in order to pay for a college education, which you need for global competition, you need for competition in this country, is far higher than any other country in the world, any other industrial country in the world, by far, equaling almost 50% of disposable income. That is a shocking number. And education is the great equalizer, and for many American families, it's out of reach because of the cost, the necessity to borrow money. But let me get beyond the numbers for one moment and talk a little bit about the people. Senator Mikulski and I, last Thursday, were on the campus of Bowie State University and UMBC. Bowie State is one of our historically black colleges and universities in Maryland, located in Prince George's County, Maryland. We had a chance not only to meet with Dr. Mickey Burnham, the president of Bowie State University, but with students around the table to talk about how they go about trying to arrange for scholarships and loans in order to be able to afford a college education. Now, Bowie State University is a good buy compared to other colleges. Tuition's only around $5,000. You would think that those students are in good shape. But let me tell you about the realities. Dr. Burnham was explaining to us that on the first day of school, many students who they thought would be enrolled were not enrolled. Why? Because they couldn't put together the total financial package in order to satisfy the tuition cost. So they were not formally enrolled. I was talking to some students at that roundtable discussion who explained to me that there were students who showed up for the first day of class without the textbook because they couldn't afford the textbook. Now, they're going to be behind before they even start because of the high cost of college education. But here we are at a state college, and the average debt held by a student graduating from Bowie is $27,800 at a state college. That's a shocking number. The same numbers, we go through the same thing at UMBC. Dr. Freeman Rabowski, one of the great universities in our country. And there they find so many tools to try to help their students with loans and scholarships and work study programs. And the debt there is also over $20,000 a year for their graduating seniors. It's affecting their ability to perform in college. What do I mean by that? There's a large number of debts that they have to take care of. The students do everything they can to reduce their debt, so they work. They work. Some cases, they work more than one job and attending college. It affects their ability to perform and successfully complete college. And at Bowie State, it takes about 6 years to do a 4-year program because the students are working. and are having a hard time meeting the credit requirements. In some cases, I was told, Mr. President, that there were students who wanted to take a summer class because it was offered, they needed it for their major. It would allow them to graduate in a more timely way, but they couldn't afford to take the summer class because the Pell Grants aren't available in the summertime. Now, I thank Senator Harkin, the chairman of the Committee of Jurisdiction, for offering legislation that would correct that would allow for Pell Grants to be available on a 12-month basis. That would help. Now, yes, the effect of the high cost of education is first and foremost on the individual. Too many children are not going to college. Too many children are not going to the college they would like to. Too many students are taking too many years to graduate because of the high cost of college. Too many students aren't going to go into those advanced degrees because they have too much debt and they have to work and they have to pay off their student loans. Too many students don't have all the training they need in order to do the best for themselves. And it's affecting their ability to succeed economically. They're delayed in their career choices because of extra years of college. And it's affecting their ability to buy homes because they have student debt. It's affecting our community. The retail consumers are less than they would otherwise be. It's affecting our global competition. Yes, we got to increase Pell Grants. Yes, we have to increase public support. Yes, we have to increase transparency. But we can, this week and next, do something about it by passing the Bank on Student Emergency Loan Refinancing Act. And I thank Senator Warren, I thank Senator Franken for leading our effort on this. This will allow us to refinance loans. You can't today, can't refinance the loans. You can't take advantage of the lower interest rates. Students are paying, people who have student loans are paying thousands of dollars of extra interest costs. Let us refinance it. The government shouldn't be making money off the backs of student loan holders because the interest rates are lower than what they're charging. Let's refinance. That would save thousands of dollars to families and would help us have more affordable opportunities for education in our community. Let's give a fair shot to American families. Let's take up and pass the Bank on Student Emergency Loan Refinancing Act to allow those millions of Americans that are currently holding student debt to refinance at lower rates, saving thousands of dollars and helping Americans afford a college education.